Good morning. This is Joe Krutsinger, and we have our weekly report. Today's really a special report. It's a white paper update. Today is April the 13th, 2017. And this is a little talk on macroeconomics and if we should have some caution ahead. Now, you might say, well, what does a strategy guy know about macroeconomics? Well, I did go to Michigan State, and I was the outstanding senior in food systems, economics, and management. Macroeconomics is really the study of the big picture as opposed to the things we do every week where we take 4 months of data and optimize them and get in and out in the same day. The macro picture we hardly ever look at, but I think it's worth taking a look at this week especially. And so let's carry on. We won't be talking about track records this week, but I always include the disclaimer, and I just want you to know that when we do show track records, unless I state that they're real and they have a real disclaimer, they're hypothetical simulated reports. This week, though, we're doing a macro report, so we really aren't going to look at individual track records or simulations. The points we're going to consider today are really threefold. First of all, stock seasonality, the idea of selling in May, going away, coming back on Labor Day or whatever. That idea has been around a long time. We're going to talk about the details of that concept. We're also going to look at the fact that we are at an all-time high in the stock market. We had that 21,000 Dow high, and we are very, very close to that. We want to look at our downside risk at this level. And then, of course, we have an all-time high fear index. If you look at the British exit, you look at where we are with Korea and Syria, and now maybe the French exit, it might be a time for caution. First of all, do the markets drop in May? Well, since 1950, the Dow Jones Industrial Average has had an average return of only 0.3% during the May-October period, compared with an average gain of 7.5% during the November through April period. Now, while the exact reasons for this seasonal trading pattern are not known, lower trading volumes due to the summer vacation months, increased investment flows during the winter months are cited as contributory reasons for the discrepancy in performance between the May-October and the November-April periods, respectively. Stock seasonality. Sell in May and go away? Here's an interesting chart from equityclock.com. It shows the different stock indexes and looking over I believe it's a 10-year average, what the best date to get in and the best day to get out. For instance, in the S&P, it was October 28th to get into the stocks and be out by May the 5th. That's the one I'm kind of focusing on in this report. But you can see, there's a lot of get out on April 16th, April 15th, March 31st, March 4th, June 5th, basically in this period we're talking about. Here's the real caution in my estimation. If you take a look at this chart over in the top right corner, I've circled where we are today, and you go back, this chart goes back to 1920. And so you can see there's a lot of downside potential at this level. And even a 5 or 10% setback, let alone a 20 or 30% setback to the trend, could be devastating if you're holding too much merchandise. This chart was put together by the Credit Suisse. It's called the Credit Suisse Fear Barometer. It measures the cost of buying protection against declines in the S&P 500 index, and it's neared an all-time high this week. You can see the all-time high was with the British exit in 2016, and now we're at this debt ceiling problem with the U.S. and the possibility of the French exit, let alone all the turmoil in the world that's happening. And so this is basically an all-time high level for this index. Well, there are disadvantages of sell in May and go away. There are limitations to implementing this strategy in practice, such as your added transaction costs, tax implications of rotation in and out of equities. Another drawback is the market timing and seasonality strategies do not always work out, and the actual results may be very different from the theoretical ones. Now, the sources I've used are Encyclopedia, CNBC, and Forbes, all their websites. The disclaimer I think is important too. Seasonal timelines offered in this report are for information purposes only. They should not be considered as advice to purchase or sell mentioned securities on given dates. Data offered in this report is believed to be accurate but is not guaranteed. What does this have to do with strategies? Well, in my opinion, it might be a time to trade less. It might be looking for strategies that don't trade quite as often. You also might want to look at trading a smaller number of contracts during this type of period. And there's also the case of just resting your horses. Do more research and, just let your money, kind of fallow like a field. But that's what you do when there's caution. When it's time to put the pedal to the metal, it's time to do it. A note. I'm from Iowa, and in Iowa, it doesn't matter how good your land is, how good your equipment is, how good your seed is. It's awful hard to harvest corn in the middle of December. It doesn't matter how good your stuff is. So this seasonality is a factor. It's a factor in the underlying thing that we're looking at. And when you add these other things in, it's something to consider when deciding how many contracts to trade and which strategies to trade, in my opinion. As always, my main product is ideas, service, and support when you need it. All you need to do is go to etrackrecords.com, pull down the support tab, follow the instructions, and you'll end up sending me 2 numbers in an email. One will be a 9-digit number, one will be a 4-digit number. That'll allow me to get on your computer, fix anything, install anything, talk to you about what's happening or what's not happening. Be glad to do it. That's what I'm here for, is the service. Next week, we'll have all new recalibrations for both TradeStation and Ninjas. So it'll be a big PDF, and it'll be something you really want to get into. Your next step, if you'd like, is just call me at my office at 913-334-2202. Send me the TeamViewer 9 codes, and I'll be glad to install a trial of any of my strategies or fix anything that you might see is broken. You can email me directly at joekrut@gmail.com. And of course, our website and our blog is at etrackrecords.com. One other note, if you just go to YouTube and type in Joe Krutsinger, you'll see my latest videos on the YouTube channels. Well, thanks for watching. Have a great trading week and have a good Easter weekend. We'll see you next week.